Angela Sadat here with the Angela Sadat Group of Keller Williams Premier Realty in the Twin Cities of Minnesota. And today for our Buyer's Bulletin, we are actually discussing how much money you will need in order to purchase a home. You know, the reason that I bring this up is because actually we have a lot of buyers that come to us. We meet with them the first time, and they've got some misconceptions about how much money it takes to actually purchase a home. And a lot of times their misconceptions are actually that they have to bring a lot more money than they actually anticipated. And so they've been a little bit afraid of buying a house or getting into the market. So let me just tell you a little bit about the kind of basics of how this goes. Obviously, one of our first steps that we help you with is finding a great loan officer to discuss these topics with in depth, but I'll give you the high level overview here. So as you may know, the FHA type loan, Federal Housing Administration, that is a government loan that actually allows you to only put 3.5% down. So you can get into a house as low as 3.5% down of the actual purchase price. So that's actually a pretty achievable thing for a lot of people, and it doesn't make you stretch so much to get that. You know, you hear a lot about the 20% down conventional loans and things like that. 3.5% down can get you into an FHA product. There are also some other loans that are available at any given point in time and in different areas. One of them is called the USDA loan, and that's actually a loan, it's called a rural development loan, that in certain places, including Hudson, Wisconsin, by the way, you are able to actually put zero down, or sometimes it's less than that 3.5% down, depending on your financial situation and your individual situation. So there are other programs like that in different counties as well, where you can actually get in under that FHA loan amount of the 3.5% down. And then we move on to conventional products. So if you've got pretty good credit, you can get a 5% down conventional loan. There are also 10%, 15%, 20% down, of course, you hear that, and then you avoid the mortgage insurance that would be attached to any loan that is under 20% down. So there are a lot of different options with that, and as I said, we definitely get you together with a loan professional who can help you to kind of navigate that and what might be the best plan for you. But please know that there are a lot of different options where that's concerned. As far as closing costs, that's always the second thing. There's your down payment, there's the closing costs. So the closing costs come into play, and a lot of times those are a little bit negotiable depending on the market that you're purchasing in. If it's a very fast moving market, like homes are being sold in multiple offers, sometimes we are ending up paying for our own closing costs as the buyer. And then on some purchases, we're actually able to negotiate with the seller to ask them to also help with those closing costs. So again, there are a lot of different scenarios that can play out. So at our buyer's appointment, what we do is we sit down and we discuss all of those dynamics within the market that you're actually looking to purchase in and the situation that is yours individually. So give us a call. We can definitely set that appointment and start talking about what might be the best scenario for you. Thanks for joining us.